Well, good morning, everybody. My name is Jim Codney. I'm National Sales Director here at Western Marketing. I'm really excited to introduce you to our guest presenter and the platform that we partnered with Stream. Obviously, we think there's great potential for you, your business, but also to serve your clients in a way you probably haven't thought of before. But before we do that, I just want to talk about a couple quick things. First of all, thank you very much for attending the webinar today. I know when you are sitting on a presentation with Jay and myself, you aren't out at appointments, making money, paying your bills, putting food on the table. With that, we're going to try and make sure this is a meaningful webinar, give you a lot of good information that hopefully can really help you grow your business. Second of all, we are here for you. Without you, it doesn't matter, right? Jay and I don't have a job without our agents. So with that, if you have questions, please type any question relevant to this training in the question box. Typically, we get to those at the end of the presentation. And if we don't answer your question, don't fret. It's probably because it's on a very specific scenario. Sometimes I get asked about a client that one of my agents is working with on a webinar. Those we handle after the presentation on a one-on-one basis. So if we don't get to your question, it's not that we're ignoring you. It's that we want to give you and your question the time and information it deserves. So somebody will follow up with you. So with that, I'm super excited to introduce Jay Peak. He's Chief Operating Officer of the Stream plan. And Jay's going to talk to you about, a way to, like I said, to really grow your business, help your clients in ways with life insurance that you probably not even thought of before. So with that, Jay, welcome.
Thank you so much. I'm excited to be here. For you guys are part of a wonderful organization. And as I was talking to Jim and Sandy and everybody at Western Marketing about the Stream plan, this seems to be a good fit for some of the agents that are part of Western Marketing. And I'm really excited to present this to you. What I'd like to do first is talk a little bit about what the Stream plan is and what it is not, basically. The traditional premium finance space has been reserved for the ultra wealthy, for 10 million, 20 million and above in assets. And that type of planning has been reserved for agents that are, have clients in that space. And so the Stream plan is designed to offer leveraged life insurance planning through bank loans without having to be an ultra high net worth person. And I think that is really important because for a lot of the agents on the call, including myself over the last 20 years of being an agent, had very few clients that actually met that profile. Most of my clients were, regular folks or maybe what we'd call an accredited investor. And so the Stream plan is designed for accredited investors. So if you're taking notes, this would be a good time to maybe just take some quick notes about what that really means. A accredited investor is someone who makes $200,000 as an individual, $300,000 as a couple, or has $1 million in investable assets. And there are a lot more of those out there than there are 10 to 20 million and above in assets. So this really opens up the market to a lot of the clients that you may have in your book of business. May not be all of them, but for some of them, this is going to allow them to retire and leverage their life insurance cash value to take tax-free loans from that policy to have a wonderful retirement and have access to the ultra wealthy type of planning. And so that's what we're going to introduce to you today. And I'm very excited, Jim, to be here. So thank you for inviting me. So let's talk about a little bit about Stream, and we'll just go through the process here. Jim, can you see my screen just to confirm? Okay, perfect. So this is the streamplan.com. So I would encourage you to go to our website, check it out, read through some of this, and you can see some of the benefits and how it works and our clients. And I'm going to walk through a lot of that right now, but I would just encourage you to visit the site. And so we have a process that we'll go through with you to certify you as a Stream agent. And the reason we do that is to make sure that you understand how this type of planning works, and that you can explain it to your client, and ultimately you can leverage the Western marketing team and our team to help you put these cases together. And so you'll have a actual portal login, which is really cool. And so you'll be able to log in and quote clients. Western marketing can quote clients. You can see all your quotes in there, which I'll show you in a second. Then also you can access a training portal 24 hours a day, that if you can't remember how something exactly works, you can kind of look at it and say, oh yeah, that's where I go to click to find the information I need. So we're going to go through that in some detail today, and then at the end we'd be glad to answer any questions. So let's say that you had a client that was in their 30s, for example, that was a successful business owner, and they're looking to do some type of retirement plan. You're a life insurance agent, or maybe you have access to that type of client, and you're thinking, what could I do? And there's a lot of agents out there that will sell a IUL or a whole life policy, and they basically design it to have cash value accumulation. And the idea behind that is that when you turn 65, for example, you could turn on income from that policy, you borrow against that cash value, and you take out a tax-free income stream for the rest of your life. And there's some tax laws behind that, TAMRA, DEFRA 7702, but there's some, because it's a loan against the policy, there's not any tax that's being taken out. So it's a great way to plan for retirement, to kind of supplement other retirement that they may have. The key to that I think is important for everybody to know is the Stream plan takes that and leverages it up to 5 times with a bank loan. And the great thing for everybody on the call today that I want you to know is there's no collateral required for the bank. There's no credit check for that. All they have to be is an accredited investor and be able to obviously pass the medical exam. And then, you know, prove that they have those funds with a couple of years of tax returns and a personal financial statement. So as long as they can do that, they can qualify for the Stream plan. So the leverage that I'm going to show you here in just a second on the estimator is a very powerful way for you not only to present Stream, but also it leverages, again, the cash value inside these policies. So imagine selling a regular IUL or whole life, for example, for supplemental retirement planning, and take that number times 3, 4, or 5 times the leverage. So let's get into it. Once you go here and you go to the agent portal here, and once you go through our certification process, you'll have access to that portal. It's going to bring you to a screen that looks like this. Now, what I'd like to do is I'm going to walk you through this step by step, and then I'm going to explain to you what everything means. So let's just use an example of, I said 30-year-old male a while ago, so let's just stick with that. And then on the health status, again, you know, are they a top health status? Are they standard? And let's just assume the best case scenario in this for this 30-year-old male that he's healthy. And here we do a annual contribution. Now, the annual contribution is what your client, in this case, would be contributing toward this policy, right? So if you had somebody that was contributing $25,000 or $50,000 to a normal IUL that a year, that's what this number is. So let's just use 50,000 in this case. Let's go big, guys. And let's say that we're going to start the income at 65. We're going to make it simple. When you click calculate, this is going to ping National Life Group. That's who we have partnered with the Stream plan. We do have other carriers that we're working with to onboard, but right now we have National Life Group. And when I hit calculate, this is actually pinging their database to do this quote. So this is the real quote live right now in front of you from their API connection. Now you can see here that the contribution that the client made here for $50,000, we only contribute that for a couple of years. So you can see that they actually contributed $250,000 into this this particular product. And there's the income here. You can see here in the green, and I'll go a little bit more in detail to this in just a second, but this is basically a snapshot for you to see, hey, here's how much they put in, and here's the estimated income that they could have potentially in retirement as a total. So we estimate that income through age 85, just to let you know that the income does go to 120, but we just showed 85 because that's life expectancy for someone that would be 30 today based on the CSO tables. And so the stream plan allows the client here to put in $50,000. Can you guys still hear me?
Hey, Jay.
Hey, there we go. Can
Now
you guys...
we can. I'm sorry, your audio went out for just a moment. I shut off my webcam for bandwidth, but we can hear you now.
Okay.
So maybe back up just a little bit if you don't mind, and we'll go from there. Thank you.
Sure. So the client, again, is contributing, in this example, $50,000 a year for 5 years. And so 5 times 50,000 is 250,000 that the annual contribution, I'm sorry, the total contribution from the client. That gives them a projected cumulative net profit of right here, this $10 million for putting in only 250,000. And so you say, well, how does that happen? Well, it's because they're leveraging not only what they're putting in, but the bank is also putting in money on top of that. That's the really cool part about this, guys. So let me go down here, and this will be a little bit easier for you guys to read. In this case, because they're in their 30s, they have 5-to-1 leverage. That means for every dollar that they're putting in, they're receiving 5 times that from total accumulation from their contribution in the bank. And so here we go, right here at age 30, you can see there's a very faint annual contribution here for the first 5 years. And then you have the annual bank contribution. So they're also contributing here, but they continue to contribute even after the 5 years. So that's part of the key to this is the bank is contributing with the client for the first 5 years. And then after that, they're still contributing. And you can see they're contributing up to age 39. And this is a bank loan. And so I'll show you here in a minute how the bank loan is paid back. So obviously this policy has some time to grow because this client's so young. So this is kind of the ideal situation. But right here, you can see the annual income starting to come out 65, and the light green is the cumulative income coming out of the policy. So here's the total amount. The bank actually contributed a net amount of $1,416,666 to this policy. If you add the $250,000 that the client contributed, that's where we have the total premium paid with 5 times leverage. Obviously, there's a 0% floor in this type of policy because it's an IUL. And we have a loan payoff after 13 years. So what does that mean to everybody on the call? What that means is, again, there's no collateral for this loan. They didn't have to qualify credit-wise. And if someone has a question how we do that, we can definitely get into the weeds on how that actually happens. But in year 13, we have enough cash value to pay off that loan from the bank. And then from there, then the client can start taking income after that. Obviously, we'll illustrate out further than that at age 65, but after that bank loan's paid off, the client technically could start taking income, although it'd probably be better to wait a little bit past that, and we can obviously pull those illustrations for you guys. What are the costs involved in this, right? Well, we have a loan from the bank, right? And so we don't mark up the loan. That's the loan amount right from the bank. The only fee that we charge is we're actually on the application for a percentage. and we can talk about that in the Q&A at the end, Jim, but the annual fee for the member is $750 per year, right, for 10 years. So that's the cost to the client. And so when the client contributes that $50,000, for example, we're taking that $750 and we're rolling that into that. So it's not an additional cost on top of that. They're not having to write us a check every year for $750. It's all part of that contribution. And so down here we have a summary. Again, they contributed $50,000 for 5 years. The bank contributes $116,666 annually. The next 5 years, the bank is still contributing the same amount, even though the client is not contributing anymore. The policy grows uninterrupted due to compounding effect. And after 36 years, guys, and they turn 65, in this case, you're maybe a business owner, young client at age 30, look at that income that they receive, $524,854 annually, and that's tax-free income. So I hope that this shows you the power of what we're talking about and what Western Marketing is bringing to you guys with this 5-to-1 leverage and how much income that can produce for your clients. So let's talk a little bit more about what the next step would be. So this is the estimator, and we call it that because this is where you can kind of play with the numbers back and forth. So again, let's say that they said, well, I want to contribute $25,000, right? All you have to do is hit recalculate. It's going to ping the National Life Group API. It's going to come back, and then it's going to say, here is the numbers. And again, pulls up the nice illustration for you and talks about the income that they would have laid out the same way. So this portal here, again, if you are just joining us, you would have access to once you go through our stream training, and you can kind of play with some different client ages in the estimator. But let's just say that they wanted to say, yeah, I'm really interested in this. Tell me more about, how does this work? I want to look at the illustration and kind of dig into the weeds a little bit more. What you would do is hit create a quote. And so I have one just for the sake of time pulled up here. But again, we have the male age 30, elite health status, $50,000 in contribution, take income at 65, it just carried over. And what it does is it produces this really nice presentation for your prospects. So this is something that they can take home with them and read over, but you'll notice it's all kind of the same information that we just went over, right? And we even include an FAQ document for them. And what that ultimately looks like is a PDF, right? So this PDF would obviously, have your information on it prepared by, your agent name for your client name on the date. And it shows just in 5 short years of contributing, you can have all these great benefits. And then you go down here, it shows the action plan, and see the bank is adding $5.67 for every dollar that they're putting in. Again, $0 floor, so it just kind of gives an overview of that. This is exactly what you showed them previously on the estimator. Has the beautiful graphs as well. And then we get into the plan summary. So I told you earlier, I'm going to show you where the bank loan is paid off, because obviously you're taking a loan again, and using the policy as collateral. And so where does that actually happen? Well, you can look in here and you can see what the client is contributing out of pocket, what the bank is contributing, and the total annual premiums here. And so if you come down here, in this case, year 13, you can see that there was a withdrawal right here of the $2,043,849 right there. So what that is that's us paying back the loan to the bank, okay? So the income that we were showing you above was after the bank loan had been paid off out of the policy as a loan and turning on income at age 65. There are other ways to pay that loan. Some clients say, hey, I had a good year. I want to, pay off some of the loan or put some money toward the loan. They can absolutely do that. They don't have to borrow the money out of their policy to pay for it. But in the standard design, we do have that where they can just pay it off right out of the policy. And again, you can see the policy keeps going, even though we're illustrating to age 85, it continues on and on and on. And you can see here in green this is the tax-free income that the client would receive. Also, on this quote here, there's and where I found that stream finance model was right here. I was able to download it, and that's what pulled up the PDF. Let's say you want to look at the carrier illustration. Again, you can download that carrier illustration, and here's the national life illustration right here for you. That easy, and shows everything that I just told you about. But it's just a normal carrier illustration. Okay. So what happens after the sale, right? So obviously, this is kind of a high-level overview on how all this works. But let's say you went through the estimator and they said, yep, I like this number. Then you went to the quote. Well, all you have to do is proceed to the application process. And what this is going to do is allow you to enroll your clients right here on the Stream website. And so there's a note, if you're taking notes, the way that we're doing this is we're creating what's called a tranche, meaning that we're taking several smaller investors and credit investors, and we're pulling them into one big super investor. And that's what we're doing the loan with at the bank. That's why we don't need collateral or pull credit, is because we're pulling everybody's money together. We've already got the credit lines established at the banks. So it's easy for us to just create a tranche. And usually we create those tranches around $1 million or so in premium. But to do that, we are incorporated out of Delaware, and we do that for all the consumer protections. I'm sure you've heard of the different protections you have in Delaware. And so if you participate in the Stream plan, you will need to be licensed in Delaware. So just to kind of lay that out there, if you want to participate, obviously you're licensed in the state you're doing business in, but even though you're licensed in that state, you also have to have a Delaware license number. It's easy, they don't require fingerprints, so it should go pretty quick. But you need to put your Delaware license number in there. And then as we go through the different carrier illustrations, you'll notice that you have e-sign here. So with all the different documents that we would have for this, we get 2 years of tax returns, a personal financial statement. We obviously have the carrier illustration that they sign. All these different things are all DocuSign. So it makes it very easy for you to click the button, send it to them, they sign it, they send it back, and you're done, right? So there's another integration that we're working on right now, which in the very near future, you will be able to not only do the Stream documents, which is what I'm showing you here. These are documents that Stream requires, but also you'll be able to enroll your client right here in the same platform. So we are working on that diligently with IGO. It's not ready yet. So in this case, if you were to take the application, you would take it in your normal fashion that you do with Western Marketing. And we would be on the application for 25%. So that's how Stream gets paid throughout this whole thing. Where there's really 2 ways that we get paid. We charge a client a fee for $750 a year for 10 years. And that kind of keeps the lights on and pays for the administration of doing all this stuff. And then when you write the application, you write it just your normal way through Western Marketing, but you're going to split it on the app. You get 75% on your code, Stream gets 25% on our code, and then we help manage all this for you and get these policies issued and get them through the tranches. So once you have sold a Stream plan, what if you want to have access to all these documents, all the things that I've been talking about, right? Well, you can go over here to the left and click on policies. So you'll notice that you go from estimator to, you have your client in there in quotes, and now we're going to policies. And so you can see here that this is a dummy example, but you'll be able to see the policy number for the client. You'll be able to see what tranche they're in. And what I mean by that, let me just explain one more time. We typically close a tranche at $1 million. So that could be one client. It could be 10 clients all contributing $100,000. It could be, a variety of that, but that's kind of the number that we get to. And that's that super tranche, the super investor that we're bringing to the bank, right, to do the actual loan. And so this case, Roberto's in year 2 of the contribution. He can see his cash surrender value, the death benefit, any outstanding loan balance here, the current loan rate, the initial loan rate that he signed up for. And then when you go down here, you could open up his carrier illustration, his quote that you did, the estimates that you did, the financial questionnaire, everything that we have here, he can have access to, and you have access to as well. So the great thing about this is you'll notice I'm signed in, it says Stream Agent here to the left. There's a Stream Client as well. So not only will you be able to see all of these documents for all of your clients in here, but then your individual client can only see their information as well. So they will get a login and be able to see all that. So this is really cool, guys. I hope that you can see the value in this. Let me do a quick review, and then we'll talk about the certification process. And Jim, I'll throw it back to you. So again, who is this for? This is for accredited investors, 200,000 or more in income for an individual, 300,000 if they file jointly as a couple, or $1 million in assets. The Stream Plan is designed to bring the type of planning that you would do for a $10 or $20 million client without having to require them to have that much money, so to speak, without any collateral and without a credit check. And we can do the same type of planning for them. So this opens up a wide market for us. You can use the estimator to quote different ages, obviously different contribution amounts. The minimum is $20,000 on the annual contribution from our end, from the user's end. And then you can come over here and see all the quotes that you have here, and you can dig down into a specific quote and see all the documents that are there. Your client can also see that. And remember, we have these very nice PDFs for you to present with. We have presentations ready for you. We can white label for you as far as putting your name and your information on all these sheets. And then you'll automatically get pinged for the actual illustration itself that's already designed the Stream way, so you don't have to worry about how to design it. And then remember, your client can also see their information in addition to you. But when you come in here, this is a great way for you to look at, if they have a question, hey, what's my cash surrender value? You don't have to go in and dig into an in-force illustration. This is so easy, guys. You just go right here and you say, oh, you have $250,466. It's right there. Or if they want to know what their current loan rate is at the bank, it's right here, guys. So Jim, let me cover one more thing, and then I'll throw it back to you. So how do you get involved in Stream? Well, one, you have to be a Western marketing agent. So that's important. Be contracted with National Life through Western Marketing. You have to have a Delaware license because we are cited out of Delaware. And then you will attend a training that we have, and that training is online. And here's the course that we can send to you. So you'll get with your marketer, tell them you're interested in Stream, or get with Jim, and he'll clarify that process in a second. We'll send you out the course certification. You can see it's about 4 hours long if you played it on the normal speed. And this is where we get into the details. So I'm telling you how the clock works, all right, so to speak. This is going to show you how the clock is made, all the little details about, how the tranche is created, our operating agreement, different things like that. And so let's go through some of those different things that you'll learn in the certification course. Again, this doesn't cost you anything to join the certification course. It's all part of this because you're a Western marketing agent. But you can see here, you're going to be introduced to the Stream team. So the good news is it's not just me. So you have a whole team that's backing you not only with Western marketing, but with Stream. The process to become certified. Again, we talk about licensing and contracting, which I just mentioned there. We go over some basics of IUL. So if this is a newer market to you, that's okay. You have a wonderful team behind you at Western Marketing, and also us to help you understand how some of these triggers work with the IULs, and specifically National Life. Then we talk about the accredited investor, right? So what does that mean? Well, I've mentioned that to you a couple times and gave you those limits. So we go over that again. We also talked about the leverage, and if you remember, the leverage was 5 times on the example that we gave you. If they're in their 30s, it's 5 times leverage. If they're in their 40s, it's 4 times leverage. and 50s and above is 3 times leverage. And so that should kind of give you an idea. Of course, you can use the quoter to see that. We also go through some example case studies and stress test designs. And so if you're newer to this market, you might want to have some questions like, well, what happens if the bank fails? What happens if Stream goes under? What happens if the policy doesn't perform or interest rates spike? So all those questions, we've done stress test designs, forward and backwards, up and down, guys. And so we could tell you exactly what would happen in that scenario. And we even show you the case studies for those examples. So that way, when your client asks it, you can say, oh, I've got a case study right here on exactly what would happen in that case. So that should give you some confidence going into this, especially if you're new to the space. We talk a little bit about overcoming objections, some frequently asked questions that we get. And then we do have a OA, operating agreement, and a private placement memorandum, a PPM agreement that the client signs. And so we go in detail. This is one of the longer videos, but we go in detail about those agreements. The Stream portal, which I just presented to you, that is, again, we go through that. Talk about presenting Stream. We give you the pitch deck. We give you all the different documents, the case study PDFs. And to be certified, what we do is we have you record a simple video using like Loom or some software to record yourself, and just doing the presentation. That way we can give you any tweaks or anything that we might encourage you to change. And then you're certified. And then you work with Western Marketing, you work with us. You don't have to know everything. Don't worry about that. We will walk you through the process to get your clients quoted and through the Stream process. So Jim, with that in mind, I would love to turn it back over to you. And thank you again for having us. We're very excited to be here.
Yeah, Jay, thank you so much. Everybody, now's the time. I know we have 1 or 2 questions already in the question box. Jay went through a lot. I'm just going to reiterate a few things from a question or 2 that I've seen already. And then, again, feel free to ask questions. So Jay talked about accredited investor. Let's talk concept, right? As normal folk, right? Not uber wealthy people. Most of us on this call are normal, hardworking folks that hopefully make a decent living, but aren't uber rich, right? I remember, and I've heard it my whole life, the rich keep getting richer, right? You hear that phrase a lot, and some people go, hey, how did they do that? Well, historically, with traditional premium financing, uber wealthy people, as Jay said, would do just what he's talking about, but they do it with more than 20 or 25 or 50,000. They might do it with $500,000 or $1 million. And as you saw, if they're getting 5x from a bank and, only having to pay 5 years and then the bank keeps paying, you can imagine how that helps even accentuate generational wealth. What Stream has done that's unique, right, is that they brought that concept into play for a lot more of your clients. Yes, I know it's not for every person you'll ever talk to. It's not supposed to be, but it is for a lot more than most of, if you look into premium financing or if you've ever done it before, it's for a lot more potential clients. So I think that's super exciting, right? There's no collateral. There's no credit check, which is, again, relatively unique with Stream. Often there's a personal guarantee or collateral assignment, credit checks, stuff like that. So when you're looking at if you have the potential and you're interested in this type of business, who do you partner with? Well, that's a big part of why we partnered with Jay and the rest of the team at the Stream Plan. Not the only reason. We've actually spent a lot of time vetting them, talking to them in many meetings. But the fact that they're able to offer you and your clients something that the barrier to entry is more palatable, absolutely helps. I get questions all the time. I've talked to a couple agents and agencies about Stream, and National Life Group comes up, and the question is, well, how do I get contracted through Stream? And Jay briefly said this, but I want to be clear. If you're contracted with National Life Group already with Western Marketing, you actually don't have to do anything to your contract. All you're going to do is certify, work with the Stream team and certify and get done. And then at the end, all you do is in the agent split, you're 75%, they're 25%. Now, for those of you who are not experienced with premium financing, that's actually a very fair split, by the way. I won't mention, but the group that I had traditionally used before this charges or splits 30% instead of 20%. So you get to keep more of your commission. And by the way, it doesn't hurt that these are bigger policies than normally are written. So the comp on these things can be, really, really nice and help you pay those bills that you aren't paying while you're listening to JI on this webinar. And make sure you get your Delaware non-residence license. That's table stakes. You can't do the Stream plan without it. And I don't know, Jay. I think you briefly touched on this, but I've got a question about National Life Group. Are they the only carrier you're using? And I know the answer, but I'm going to defer to you on your thoughts on that as we are getting into more of the questions.
Yeah, absolutely. So National Life right now is the only carrier. We started with one carrier to really get our process down, to go through compliance. And believe me, we've been through more compliance from the bank side, from the carrier side, from your side. Everybody has been going through to make sure that the vetting process. And so that takes a while, as you guys can imagine. And so we started with National Life. They brought us to the table, so to speak. And we are working with a couple of other carriers right now. And that's Allianz and Symetra, but we are not there yet with them. So just to be fully, just transparent with you guys, it's not there yet. But when we do get there, you'll be able to select what carrier, compare the carriers and all that stuff. So that's kind of the 2.0, and we're really excited to have that. And we will make an official announcement when we get there.
Yeah, that's exciting. National Life Group does a really good job, but in hopefully not the too distant future, you'll be able to compare 2 or 3 different carrier options, which just helps your client even more. But again, we at Western Marketing do a lot of business currently with National Life Group. They're one of our premium partners, especially for IULs. So a great company to start with. So the next question is just maybe a clarification, and I can take this one, Jay, if you don't mind. But John asked for a clarification. Client contributes 5 years and bank 10. And John, you're absolutely right. So the client, let's say they have a $25,000 a year premium, like the last example Jay used. Yeah, they're only paying $125,000 into this. And if they're in their 30s, the bank is paying slightly over 5x. I think it was 557 per $1 or something close to that in premiums, and they're paying for 10 years. And so not only are you getting the leverage of the difference between what the client pays in those 5 years and what the bank pays, but then the client's done and the bank pays for another 5 years. And that's how this leverage happens. That's kind of the secret sauce, for lack of a better term. Again, why does the bank do it? Because they're charging an interest rate on the loan that Jay showed you. I think the initial interest rate and what Jay showed was right at 7.05%, going by memory. The bank's going to make return on their investment. The bank does get their money back, folks. In year 13 in this example, I've seen other examples where it was year 14. It kind of depends on the individual client situation, but it's somewhere around 13 or 14 from all the illustrations I've seen. But yeah, it's really nice. I'm going to add one thing to this because it's something that I learned. Really, what's at risk for the client? really where the client has risk financially is if they don't make their full 5 years of their commitment to premium. Now, do they still get money back? Absolutely, but the bank recoups before the client does. And the good news is that's all able to be illustrated out. So if you need to see that, if you get certified and with the Stream Plan and want to see that, we can show you where to see that. So if a client makes one premium payment and then has an emergency and can't make payments 2 through 5, they still will get some of their funds back, but they will not get every penny. So it's really important, again, with transparencies, with making sure you know what you're looking at. That's really the surrender charge if you're an annuity agent, right? That's really the penalty potential for a client. Once they contribute their 5 years, though, they're good. So the next, Jay, is a really good question. Does the policy require an early cash value rider?
Yes, it does. That's a great question. And so that's how we're able to achieve a lot of this. And so what that does for the client is it creates early cash value in the policy. Obviously, the policy is the collateral to the loan. And the difference between what the policy makes versus what the bank is charging, the spread, right, is how it's earning money. The early cash value rider does spread your comp. So just so you know, these are, typically high comp cases because they're larger premium, but that does spread your premium out. Jim, I could be mistaken. I think it's 5 or 6 years with National Life Group.
Yeah. So, Frederick, let us know if that answered your question. But yes, you're going to do the early cash value rider. Dan asked what the bank loan rate is and what's the assumed rate of return on the policy. So Jay, I know that's a great question, but go ahead and jump in with that one.
Yeah, so obviously the bank rate is variable year to year depending on what they do, what they charge. And so we pull that information every Monday and put that into the software. So it's, whatever that is, it's live. And so obviously that's going to vary depending on when the policy is sold, what's going on with the Fed, all the things that you can imagine, right? The rate that we're getting from the policy is based off of what National Life gives us. And so we're not assuming any rates other than what the carrier gives us and is based on their track record for that particular index, for example, like the S&P 500, and then what the bank charges. So those all come straight from the source, so to speak.
Okay. No, that's great. Dan, one other thing, and I see your next question, so I'll get there in just a second. But the other thing is the loan rate depends on the tranche you're in. So once they hit a tranche, they kind of set the initial rate, if that makes sense. And then so people in the next tranche, their starting interest rate could be higher or lower depending on the market. And Dan's follow-up question is the loan rate capped? Okay. So, meaning it's variable year to year. So in year 5 or 6, can it go to 20% in a scenario or something?
Yeah, so obviously that is a risk of premium finance, right? That rates could change and not be as effective. We did stress design those, right? And to see what would happen. And there wasn't a scenario that we could really find unless the the carrier obviously really wasn't working and the bank wasn't working at the same time. That is a risk though. And so when you get into these types of policies and what's the downside of how they blow up, so to speak? Well, we have the option to lock in some rates with the carriers, the various carriers. It's not just National Life. Obviously, this is the one that's on the platform right now, and also at the bank. And so if we see some of these variable things happening, right, we're watching behind the scenes to say, hey, do we need to lock in a rate, so to speak? But that's a little bit more technical, and that's policy tranche by tranche and year by year. So hopefully that answers it.
Okay, perfect. And Frederick asks, you know, that obviously we illustrated retirement income supplement, but would this work? Let's say somebody has their retirement income done. They're good. They don't need more than X, whatever they put in, and they really want it for transfer of generational wealth and a death benefit. Does this work for that as well?
Yeah, that's a wonderful question. So the direct answer is yes. So we can use this and design it in several different ways. So let me just kind of mention some of those. Obviously, we showed the retirement income play. We could also do that for generational wealth. So it's more of a death benefit play on that. And we just design it differently. You could still do the bank leverage, still do the contribution for 5 years. And the ownership could be a trust, for example. It could be an individual or a business. So there's a lot of flexibility there. We actually have an LLC that we create for each individual member of this plan. And so it's a little bit more technical details, but that's how we create this. And we transfer the policy out of the LLC to the individual once the tranche is closed. And then also, this is going to be really great. We can also do this for medical professionals. It's called MedStream. We can do this for kids as well. So if you have a parent or a grandparent that wants to do generational gifting to their kids or grandkids, we can do that. It's called GenStream. And specifically for like a business owner, we have something called BizStream. So you can kind of see the the flow here. But BizStream, let's say that I was an owner in this particular example, and I had my retirement taken care of. I really, was good, but I had a buy-sell agreement, or with a partner, for example. I could create this policy with the buy-sell, so using permanent life insurance instead of a term, and then turn around, and once we're out and the bank's paid off, I could use that for that has chronic illness benefit. So I could use this as having that for long-term care protection. Maybe my business partner doesn't have the same amount of money saved up and they want to use it for retirement planning, right? There's a lot of different flexibilities that we have that is much different than the traditional premium finance world. But yes, to answer your question, we can absolutely do it that way.
Yeah, these are great questions, guys. And then the last question I have right now, and again, if y'all have questions, please type them in. Jay and I'll stay on as long as needed to answer questions. But the last question I have right here is, if loan rates increase, can the client borrow from the policy to pay premium? So I correct me if I'm wrong, Jay. The short answer, John, is no, because until the bank loan is paid back, the bank actually owns the policy, not your client. Is that correct, Jay?
Yeah, and really, we designed these, especially at that early cash value rider, to avoid these issues. Obviously, in a traditional premium finance world, the person would have to come up with more cash or collateral. Could that happen? Well, we don't have any collateral besides the policy, so that they could put in more cash technically outside of the policy. But we've designed these in such a way that the likelihood of that happening is very, very unlikely. But ultimately, it is a premium finance, and if worst case scenario happen and everything fails all at once, then yeah, it could change the landscape on that. But to Jim's point, if that happened and they want to get out of the policy for whatever reason, then we would just pay off the bank loan with whatever cash value is left in there, and then they would receive the remainder as a distribution.
All right, perfect. I'm just looking to see if there's any questions. Yeah, it looks like, here we go. We're getting more. That's awesome. So Alan, it's different. Alan's obviously looked into or done premium financing before. The stream plan is different than Kaizen, folks. So if you've been doing or looked into premium finance before, there's nothing wrong with Kaizen. I'm not going to say anything bad about their platform. I will tell you that we chose to partner with Stream for exactly what I said earlier, right? No collateral, no credit check, smaller split on your app. Kaizen typically is a 30% split. And again, that's the market. So, and they work with typically higher net worth clients than what Stream is bringing into this market. So, I think it's Kaizen is great at what they do. Again, not saying anything bad, but for most of our agents and the clients that can work, I think the Stream platform makes more sense. And I'm happy to get into a deeper conversation on a one-on-one basis, but there are reasons that we chose to partner with Stream. The next question is about dual contracting with NLG. Dave, I don't think they allow dual contracting. I don't know, Jay, if you know off the top of your head. That's something that we could verify with them, but I don't believe they accept dual contracting. So if you're contracted with another upline and you want to work with the Stream platform, oh shucks, Dave, you're going to have to get a release from your upline and come work with us. I promise you, we'll take care of you, though, if that's what you need to do. Feel free, though, to reach out to me, and I'm happy to call National Life Group directly and verify that. Because if you can and you want to, I'm totally okay with that as well. So it looks like that's the end of the questions. Again, got a second. So if you have another question, let me know as Jay and I start wrapping up. Folks, thank you again for spending what now is a little over 50 minutes with Jay and the presentation, the Stream platform, as well as with me here from Western Marketing. We try and bring you things in webinars that we believe will give value to you and your business. This presentation has been recorded. It will be sent to everybody. So if you maybe were taking notes, but you missed something and you're like, shoot, what did Jay say about this? Don't worry, you're gonna get a recording of the webinar, and you're welcome to use it. If you have other questions or just want to talk about National Life Group, Stream, the other potential carriers, Allianz and Symetra, all you need to do is give us a call. Our direct line here at Western Marketing is 800-852-7152. Again, 800-852-7152. My name again is Jim Codney. I'm the National Sales Director here, and I manage our life and annuity team. You can also speak to your marketer, whether it's Amanda, Tyler Marr, or if you work with any of our other marketers, you're welcome to talk to them about getting set up with Stream. Don't forget you're going to need to certify. So please, if you're interested, don't wait till you have a client that needs a policy before the end of the week and then call me and go, Jim, I need to get this Stream thing going. Folks, if you think this is going to be something you want to add to your business, let's go ahead and get you certified now. And that way, when you run into a client, even if you aren't working with one today, but that way you're ready when you run into that client. So with that, again, everybody on the webinar, thank you very much for your time, your business. Without you, Western Marketing doesn't exist. Jay, thank you to you and the Stream Plan for being such good partners and spending some time today to go through this with our agents. And with that, everybody, I hope you have a great day, and I look forward to talk to you soon. Take care.
Thanks, guys.